Hello, everyone. I apologize for the technical difficulties, but we are about to start. Just to get through this, we have Jennifer Stiles presenting today. She is the one that handles many of your clients' cases from life, disability, long-term care, and annuities. And since 2014, she's been supervising our very busy new business team. So here is Jennifer Stiles. And if you have any questions, there should be a questions box, and you can type them in, and we'll get to them as timely as possible. Go ahead, Jenny.
Okay, thank you. I appreciate everybody's patience while we were working through that technical difficulty. So today I'm going to talk about why life insurance rate classes matter. And when we're talking about rate classes, I'm talking about life insurance approvals. And today we're going to go over the basics of underwriting. We'll go over the quoting system. We'll also talk about, we'll dive a little deeper into the underwriting process and talk about express underwriting as well as the policy delivery process. So let's first talk about the basics of underwriting. What is underwriting? Well, it's assessing and classifying the degree of risk an insured represents to the insurance company. The underwriter is going to review a lot of information about the client and decide whether to accept or decline the risk. I mean, obviously, the higher the risk, the higher the premium. And when it comes to underwriting approvals or rate classifications, I like to think of them as buckets. There are predetermined conditions you must meet in order to fit in that bucket, and there's predetermined premium prices associated with these buckets, and that's what allows us to quote different companies. Now, Preferred Plus, Preferred, and Standard Plus, these are all considered preferred classifications. These are all people that have longer than average life expectancy. And then there's the standard approval. That's somebody who has average life expectancy. So anybody who's approved at standard or better, those are all excellent offers. And then there's table ratings. These are people that may be at a little bit higher risk to the insurance company. And the way table ratings work is that depending on the company, there may be 10 or 15 table ratings, and each table rating is 25% higher than the standard premium. So for instance, if I was approved at standard rates and my premium was $1,000, if I ended up being approved at Table A or Table 1, it would be 25% higher, or 1,250. Table B would be 50% higher than the standard premium, so it would be 1,500, and so on. Now, within all these buckets, there's male and female rates. Women pay less for life insurance because we tend to live longer, so our chances of dying at a younger age are less, and our premium prices are reflected that way. There's also male and female rates, smoker and non-smoker rates. Smoker rates can be about 3 times the non-smoker version. Now, if the underwriter is not willing to take the risk on behalf of the insurance company, then the client would be declined for insurance. Now, I'd like to take a minute to explain the history of life insurance approvals, because in order to understand where we are now, you have a better understanding of where we came from. So life insurance has been in existence for centuries in some form or another. But up until about 40 or 50 years ago, everybody was approved at standard or substandard rates, okay? Standard was average life expectancy, and it still is. Back then, 90% of the people were approved as quoted. Why is that? Because 90% got standard rates, 8% were substandard, and 2% were declined. Now, back then, the application was about 3 pages. There was no blood work. They rarely ordered medical records. So basically, a client completed an application and was approved or not. There are several things, though, that changed the industry. The first one is in the 80s. They rolled out routine blood tests. Why is that? Because what happened in the 80s? But the AIDS epidemic, right? So they didn't want people being diagnosed with AIDS and then applying for life insurance. So they started doing routine blood tests in the 80s. Another significant thing was the Framingham study. Back in the 40s and 50s, they realized that clients were dying of coronary artery disease, but they really didn't have an understanding of what caused coronary artery disease. So there was this large study that was done, people who died of coronary artery disease, they studied their children and grandchildren, and they studied them for decades. And through that study, they have found that people who have elevated cholesterol and triglycerides, things like that, are higher risk of developing coronary artery disease. So in the 80s, when they're rolling out routine blood tests, they started testing those tests as well. Another significant change was when insurance companies started rolling out preferred classifications. Why should somebody who's super healthy pay for the same premium that somebody who's just average life expectancy? So insurance companies, like any business, they're competitive, right? So some companies started saying, hey, if you're super healthy, we can actually get you a lower rate than standard premium. Okay. Once you have a couple companies start doing that, others have to follow suit in order to be competitive. Now, the tricky thing is about the preferred classifications. Um, how I said, back 40, 50 years ago, 90% were approved as quoted. Well, actually, now 10 to 15% are approved as quoted. Why is that? Well, because everybody wants preferred plus, and a lot of agents just go ahead and quote the preferred plus, but very few people are actually eligible for that, about 10% of the people. Now, I just asked, how easy is it to get preferred plus? Well, maybe 10% of the people in the general population, 15% are eligible for it. However, in 2019, we actually had 37% of our clients here at LLIS get preferred plus rates for the term um, application. Now, why is that? You may say, well, are our clients healthier than the average? Maybe. Think about it. We get our clients from financial advisors, from you guys. So people who tend to go to financial advisors probably have pretty good jobs, right? Making a good amount of money, probably have access to good health insurance, and have the knowledge and desire to take care of their health. So, yes, they probably are a little bit healthier than the average population. It could also be that, we have access to a lot of insurance companies. We underwrite with about 20 different insurance companies. If we only worked with one insurance company and we were only could work with those one set of guidelines, then we wouldn't have 37% get approved at Preferred Plus. And also, financial advisors are referring clients to us at younger and younger ages. We have people in their young 20s applying for life insurance now. So when they come to us at a younger age, then, they're coming to us before they're diagnosed with any health conditions. And like I said, we deal with a lot of different insurance companies, and all of them have different underwriting guidelines. So let's take a look at, okay, um, okay, let's take a look at cholesterol guidelines. This is just one little aspect, okay? And we can take a look at two different companies that we work with, okay? Now, cholesterol, your total cholesterol should be under 200, and your ratio should be under 5.0. The ratio is your HDL cholesterol, which is your good cholesterol, over your total cholesterol. And as research has gone on, they've actually found that that may even be a more significant factor than your total cholesterol as far as determining coronary artery disease risk. So here we have company A that says, we can get you preferred plus if you have your total cholesterol of 220 as long as your ratio is 5.0 or lower. Now, company B says, well, we can get you preferred plus with the total cholesterol of 300, which is very high, as long as your ratio is 4.5 or lower. So company B is almost not even caring about your total cholesterol, but they're very strict about the ratio. And the interesting thing about that is sometimes we'll get clients that say they apply with company B and their cholesterol is 250, but the ratio is 4.8. Now, they would not be eligible for Preferred Plus with Company B because the 4.8 is higher than the 4.5. Now, Quest Diagnostics will show the levels as being normal. So clients may say, look, my ratio was totally normal according to the lab result. And that may be true. But this particular company is very strict about the ratio. And so in that particular company, you wouldn't be eligible for Preferred Plus. They don't want you just to have normal labs. They want you to have low labs. So let's start talking about the quoting because that's really the beginning of the process, right? So here we have Dave, works out, eats healthy. He wants to get a quote for life insurance. Where does he go but the internet, right? Everything's so, computerized now. But, most search engines don't ask a lot of questions. Nonetheless, he completes it, and this is what shows up for him for $1 million 20-year term for annual premiums. Now, when it comes to the underwriting part, everyone starts out at Preferred Plus in the eyes of the underwriter. Okay. But there are certain things that may prevent you from staying there. Dave would probably apply with American General because it's the least expensive company for him, right? But Dave's dad died of a heart attack at age 59. That knocked him out of Preferred Plus with all 6 companies here. What you may not realize is Dave lives in Colorado, so he's a big fan of the weed. He smokes marijuana or uses edibles, but no more than 2 times per week, and it's legal there, right? So, but as you can see here, it made his premium go up tremendously. Some of the companies would consider him table rated, others a smoker rate, others a combination of both. So as you can see here, American General would actually be the worst company for him based upon this information. Now you could say, well, maybe he should apply with all 6 companies, see which one comes back at the best offer, right? We all like to shop around and get a good offer. And shopping around for quotes is an excellent idea. However, applying for multiple companies at the same time actually negatively affects the underwriting process. And we'll go into detail about that in a little bit. It also costs the insurance company time and money. Now, we feel so strongly about this that if a client comes to us and already has a pending application somewhere else, we're going to recommend not submitting an application through us because we don't want to negatively hurt, what they have going on with the other company. Now, if the client gets an offer and they're not happy with that offer, by all means, circle back and we can see what we can do, whether we can improve on that offer. So let us do the shopping for you and your clients. We can also streamline the process if they're applying for life and disability. We can make sure that they're only examined once. Now let's take a look at the LLIS quoting system. Here you go. Here we're going to ask some lifestyle type questions because we saw in Dave's situation where lifestyle and his marijuana use does play a factor in his approval. We are going to ask health questions and we're going to ask a lot of health questions. And then we'll also ask family history questions, as we saw in Dave's situation as well. That, Dave's situation had nothing, his approval so far had nothing to do with his health. He may be healthy, but the family history and the lifestyle played a huge role in his final approval. Now, we always recommend that the client complete this information, not the financial advisor, because, of course, you're not going to know all the details about their health conditions and family history, And also, our quotes are only as good as the information provided to us, just like your recommendations. You need a lot of detailed information to make a recommendation regarding your client's finances. We need a lot of information as well. Now, once a client gets those quotes and you're copied on those emails with the quotes and the client's ready to move forward, we are going to gather some additional information, information that we need for the application process, but we didn't need it just to run quotes, social security numbers, beneficiary information, your physician's information, things like that. And then once they complete that information, we're going to do a brief phone interview with the case manager here at LLIS. This interview typically takes about 10 minutes. We're going to confirm some basic information and we may need to gather more detail. Maybe your client said they were diagnosed with diabetes, but didn't say when they were diagnosed or what their treatment was. So it gives us an opportunity to find out those details, and we can also explain the application process to them at that time. And after our interview, the quote specialist, our advisor services team member, is going to take a second look at the information. Believe it or not, after our phone interview, a lot of times we do need to revise quotes and maybe make a different recommendation because we found out something significant, right? So if the quotes stay the same, we'll send a confirmation email out to the client sending the quotes to them. So let's talk about underwriting because really, up until this point, this was all pre-underwriting we were doing here at LLIS. Our goal is to find the best company at the lowest premium for your clients, but it's really once it goes to the insurance company and the underwriter is going to review the information to assess your client's risk. So what's the underwriter going to review? A lot of information. They're going to review the application, and we'll go into detail a little bit about each one of these. They're going to review the application, the exam, the motor vehicle report, the medical information bureau, the prescription database, medical records, and a possible phone interview. Now, from this point forward, it typically takes about 2 to 3 months before an approval is made. And you'll see why in a minute. So what's in the application? Demographic information, and there's really 4 cogs in a wheel when it comes to assessing your client's risk. There's health. Everyone thinks, oh, it's all about your health, and that is a big part. But there's also lifestyle, your family history, and financial information as well. To assess medical or somebody's health, clients typically have an exam done. They're going to have blood tests done. They're looking for organ damage. So they're going to test liver function tests, kidney function tests. They'll test cholesterol, HIV. They're going to have a urinalysis. The urinalysis is going to show whether there's any nicotine in the system as well as any sort of drugs. More and more insurance companies are doing a full drug panel. The examiner will also take the client's blood pressure, height, and weight, and depending on the age of the client, a possible EKG. Now, this has been a big thing since COVID. Everyone's saying, well, with all this social distancing and stuff, nobody's a big fan of having an examiner come in your home, right? And I don't blame you, okay? And there are companies that have changed their underwriting guidelines or become a little bit more relaxed on that requirement. SBLI, however, is the only company that we work with that guarantees, I'm stressing that, guarantees lab free. The maximum amount is 500,000 and the person has to be between the ages of 20 and 50. Now, they guarantee lab free, but there's a lot of companies that actually have a lab free or accelerated process that a client may be eligible for. Now, Principal typically had it where it was up to $1 million. Due to COVID, they've actually expanded on their possible lab-free options. You could possibly get up to 2.5 as long as you're age 40 and under, or up to 2 million if your age is 41 to 50, contingent upon the fact whether you've had a complete physical with complete labs done within the past 24 months. So what they're going to do is they're going to order medical records in lieu of the exam. Penn Mutual, you may have lab free up to 5 million. And many, many other companies we work with actually have lab free options up to $1 million. Right now, even if you're fitting in those categories, we are finding about a third of the people that fit that category actually go through the lab free. So not everybody does it. Um, then there's the Medical Information Bureau. Remember when I said don't shop around, it can negatively affect the underwriting process? This is where this comes into play. This is a database that tracks submitted insurance applications. Anytime you apply for life, disability, long term care, or health insurance, your name goes into this database. The purpose of the database is to protect against fraud and making sure someone's not overinsured. So let's go back to Dave's situation. If he applied for all six companies, right? The all the companies are going to see the five other companies pending applications. Now, Dave could potentially actually place all six policies for $1 million, right? And he could be overinsured. No insurance company wants to have a client worth more dead than alive. Okay, so you've got to make sure that a client's not overinsured. Um, so it actually negatively affects the underwriting process. It also protects against fraud. Maybe you had a client that applied 6 months ago, got smoker rates because they tested positive for nicotine in their system. They decided to quit smoking, and 4 months later they apply for insurance with a different agent and different insurance company, right? And that underwriter is going to see that they applied for insurance 6 months ago, and they're going to see that a code regarding nicotine. So they're going to look at the application, and the client actually says, geez, they never, according to the application, they have never used nicotine or tobacco products in any form. So it protects the insurance company from clients, I guess, learning the system or, you know, deciding, applying again and having a different answer anyway. And yes, it protects the insurance company, but it really protects everybody because who pays for fraud, right? All the consumers through our premiums. So, it keeps everybody kind of honest, if you will. So again, um, I wouldn't submit a bunch of applications to the insurance company. Shopping around for quotes is great, but it actually negatively affects the underwriting. The other thing is about that, if an underwriter sees 10 applications out there, right away, it sends a red flag. What is this person trying to hide? Are they applying with a bunch of companies in the hopes that somebody doesn't find out that maybe they're a smoker or whatever the case may be. So um, then there's the prescription database. They do this 100% of the time where they run the client's name through the prescription database. And this shows medications that have been prescribed in the past 5 years. And medications are typically coded. Think of a traffic light. So green medications would be something like maybe birth control pills, an antibiotic last year, something like that. An underwriter's not even going to question anything like that. A yellow medication would be something like anxiety or depression meds or a narcotic. If they see an active prescription or even a past prescription for that, they're going to take a look at the application and see if that was disclosed. Maybe somebody did disclose that they were diagnosed last year with depression and they're currently on Wellbutrin. So, okay, all of that matches. That's not a problem. But if they see an active medication that was not disclosed, they're going to have us come back to the client and question them about that. And then a red medication would be something that the client would probably be declined for insurance for, something like chemotherapy or HIV treatment. And then another source of information is the medical records. Mark and I like to say this is the bane of our existence here at LLIS. This is the longest part of underwriting. It typically takes about 30 days to get medical records. And a lot of people think, you know, Jenny, just, have the underwriter call my doctor. He'll tell you I'm healthy. It doesn't work that way. All insurance companies use third-party vendors such as Exam One to order medical records. And 99.9% of all doctors in the country use a third-party copy service to handle the medical records for them. So the way this works is if the insurance company is going to order my records, Dr. Smith's records, the underwriter is going to send a request to exam one. Exam one is going to send an authorization to Dr. Smith. Now, this is an authorization I already signed with the application, giving them permission to order medical records. Well, Dr. Smith's going to send that authorization to the copy service. Now, these are not like a Kinko's or a Staples down the street. These copy services are third-party vendors that handle medical records for hundreds of thousands of doctors throughout the United States. Some of these copy services say, please allow 2 to 20 days to log in the request, just to log it in. So as you can see, it can take a long time to get medical records. Once the copy service does get to that request, they're going to send an invoice to exam one because nobody's doing all this for free. And then exam one will send payment. Now, some copy services accept credit card payments, others only accept checks. So now, exam one may need to, mail a check to the copy service. And then and only then are records released to exam one. And then they'll send it to the underwriter. Now, some doctors require their own authorization to be signed. So sometimes we've got to, in the middle of this process, we got to send a special authorization to the client for their signature. And even when they get the records, there could be missing records that, were not provided to the underwriter. So, the underwriter may need to go back to Dr. Smith and get the complete records. So this can take a long time. While we're talking about doctors, I'd like to talk about the difference between doctors and underwriters, other than the obvious. One has a medical degree and one doesn't. But we get this question a lot. If my doctor isn't worried about my cholesterol, then why is the underwriter? And this is very important to understand because your doctor has the luxury of keeping tabs on your health. If my cholesterol was 250, my doctor would probably say, Jenny, cut out some of the fatty foods and all the Twinkies you're eating and maybe do a little bit more exercise and come back in 6 months and we'll actually see what your cholesterol is then. If it's still elevated, then maybe we'll talk about putting you on cholesterol meds. Okay, the underwriter doesn't have that luxury. Doctors treat health, underwriters are assessing risk. Okay, doctors can change their treatment plan as your health changes. An underwriter is taking a snapshot of your health right now and trying to determine what are the chances that this situation is going to get worse in the next 10, 20, or 30 years, depending on the length of the policy, right? And they can't raise rates. They're locking in the premium for that term length. So they can't raise rates as your health changes. So not only that, unlike your doctor, if you're applying for $3 million of life insurance, the insurance company is actually on the hook for $3 million. So of course they're going to be stricter than your doctor. They don't have the luxury of treating you long term. And then oftentimes the insurance company wants to conduct a phone interview. Either the insurance company does it or a third-party vendor, such as Exam One. So that's another source of information. Now that's pretty much what's involved in kind of the medical underwriting. Let's take a look at the lifestyle. What's involved in that? Well, hazardous activities. Does somebody fly a plane? Do they skydive or scuba dive or race cars? We'll also talk about marijuana and alcohol use. Driving record is a lifestyle habit as well as foreign travel. Now let's talk about marijuana. This is one of our favorite topics here at LLIS. Actually, up until COVID, marijuana usage was actually the quickest changing thing in underwriting. 11 states, as of January, 11 states have legalized recreational use. 26 states have gone through some sort of decriminalization, and 47 states have allowed medical marijuana use. Okay, so people ask, how is it underwritten? It's actually viewed similar to alcohol. We're going to need to know how much, how often, what form. Are you using edibles or smoking a joint? Um, Last time you used it, and whether it's for recreational purposes or medicinal. And based upon those answers, you could be approved, depending on the company, you could be approved at preferred plus to declined. It runs the gamut. Each company is very different on how they view marijuana usage. And the interesting thing is, it doesn't matter what state you live in. They're not going to cut you some slack because you live in Colorado and it's legal there. But at the same time, they're not going to penalize somebody like myself who lives in Florida where it's not legal for recreational use. And the reason being is that it's still against federal law. So no matter what state you live in, we're all underwritten the same way. The underwriter's going to order the client's motor vehicle report. What they're looking for is multiple speeding tickets, at-fault accidents, DUIs, and suspensions. And then they're going to ask questions about foreign travel. Some companies ask about past foreign travel. All of them ask about future foreign travel. And typically what we need to know is where you're going, how long, and the purpose of the trip. Okay. Somebody going to London for a week-long vacation is looked at very differently than somebody going to Botswana in Africa to volunteer in a village. The reason being, the Botswana situation, there could be, added health concerns. Do you have access to clean water? What's the sanitation like where you're going to be? If you were to get sick, do you have access to health care? And you could be exposed to other diseases like malaria or yellow fever that you typically don't get in the United States. They're also concerned about safety issues. There could be civil unrest, and Americans could be a target for kidnapping. Maybe we're not used to the culture. The culture is very different. We put ourselves in a dangerous situation. Now, most insurance companies are fine with level 1 and 2 from the State Department. Uh, Level 1 is considered, you exercise normal precautions. Whenever you travel, there's a certain level of precautions you can take, right? You should take. Level 2 is exercise increased caution. Even then, most insurance companies are totally fine with that. Level 3 is reconsider travel, and level 4 is do not travel. Now, what's new? With COVID, all countries are level 4. Does it mean you can't travel? No, of course you could still do foreign travel. Um, However, they're recommending people not do any foreign travel. Okay. So if somebody has a planned trip to travel outside the United States, we will need to wait until they are back in the United States for 30 days prior to submitting an application, because we're also going to want to make sure that they don't have any symptoms of COVID. So, interestingly, uh, you know, traveling on a plane within the United States, the insurance companies haven't, come out with any guidelines or restrictions with that, which I kind of find interesting because, we kind of have a lot of COVID cases in this country. But right now, it's the foreign travel that they're concerned about. And then there's financial underwriting. Um, with disability insurance, there's a lot of financial underwriting, but with life insurance, there is as well. Typically, the purpose, especially for your younger clients, the purpose of life insurance is income replacement, right? So there's a certain calculation regarding the amount they can apply for based upon their income. And we have a calculator on our website. So if you're looking for ideas on how much somebody could be eligible for, feel free to look, use that calculator. But somebody who makes $25,000 a year cannot apply for $10 million of life insurance. They would be totally overinsured. And again, they would be worth so much more, worth more dead than alive. So, you don't want to have an insurance company be on the hook for something like that. Um, there's also insurable interest. The beneficiary has to have some sort of financial loss if the insured were to die. Now, spouse, children, parents, and siblings, it's automatically assumed that there's an insurable interest, okay? But my next door neighbor can't apply for insurance on me and be my beneficiary because if I were to die, there's no loss to them. Now, where this gets a little tricky is a boy and girlfriend. Um, if somebody is the primary beneficiary, that's a boy or girlfriend, the underwriter will probably come back and ask, do they own a home together? Do they have a child together? If so, then there obviously is an insurable interest at the time of application there. If not, if I started dating my boyfriend 3 weeks ago and decided to apply for $2 million of life insurance and make my boyfriend the beneficiary, they are definitely not going to approve that. The underwriter is also looking for affordability, make sure the client can afford the premium. And if the purpose is not income replacement but estate protection, then we're going to look at, the client's net worth. Family history is another component of underwriting. And when it comes to family history, they're really only looking at parents and siblings with a history of heart disease, cancer, kidney disease, stroke prior to age 60 or 65. We're not looking for cousins or great great grandfather or anybody like that. They're looking more for immediate family. Um, Remember when I said before when they rolled out preferred classifications and 10 to 15% of the people were approved as quoted at that time? Last year, LLIS had 84% of our term approvals that were approved as quoted or better. It's not 100%, which is what we strive for, but 84% is so much better than 10 to 15%. Now, the reason why our rate is so high is because of all the pre-underwriting that we do on the front end. We're not a big fan of surprises. We also quote realistically. We're not going to quote a preferred plus unless we think somebody truly will be eligible for that. And also because we work with so many different insurance company, we can find the best one for your client. Now, the 16% that came back different than quoted, sometimes they were due to labs that maybe the client's cholesterol was elevated and they didn't realize it, and so no fault of their own, right? And we didn't know it. Sometimes it's things that were not disclosed to us. So it's super important to reinforce with your clients to be as honest as possible. Now, we kind of talked about what's involved in all that underwriting and what the underwriter is looking for. But before we go into the express underwriting, let's take a look at a general timeline. Here we have, when a client requests a quote and we do our phone interview and we do the pre-underwriting, that can take about 2 weeks. The underwriting part at the insurance company can take 2 to 3 months. And from issuing to issuing a policy until it's placed in force can take about 5 to 6 weeks, and we'll go over that in just a minute. So as you can see here, this could take about 4 to 5 months, and this is not including, a client doing a 1035 exchange or anything going through that process as well. The longest process besides the medical records is clients not responding to our emails. So please encourage, as much as we try to handhold and do what we can for your clients, they have to be an active part in this process. Now, with just about all insurance companies, they have to receive premiums for 5 to 7 years. 5 to 7 years of receiving premiums before they even break even on placing that policy, because there's a lot of upfront costs, right, to them. So, and one of the priciest parts of underwriting for the insurance company is paying for exams and medical records, right? So in the past several years, really the past 8, 10 years, there's technology has changed this industry tremendously. There's a lot of good, valuable information in databases such as the prescription database and things like that. So they've actually tried to find ways to save money by not having labs or ordering medical records, and also saving time and making it more positive experience for your clients. So let's take a look at the express application process. We're going to still do our phone interview. We're going to shop it around for your client because that's what we do here. We're not going to give up that part of the process because our goal is to find the best company for your client. So we're going to actually do the shopping for you. Once a client picks a specific company to apply with, we're going to send in basic information to the insurance company. What's going to happen then is the client is going to have a phone interview with the insurance company or a third party vendor. So they'll have an extensive phone interview with them. The underwriter will run their name through the Medical Information Bureau, the prescription database, and the motor vehicle report. And if everything looks good, your client will go through the fast lane. No exam, no medical records, they'll just get an approval, right? We all hope for that. But not everybody, and we're going to always, here at LLIS, if a company has an express application process, we're going to try for that if possible, because why put somebody through an exam and ordering medical records if they don't, have to go through that process? So option 2 is, again, we're going to do our phone interview and shop it around, send the information to the insurance company, and the client's going to do the phone interview, and they'll run the client's name through those databases. But maybe your client's on cholesterol meds, so they found that out from the prescription database. The underwriter may say, I want to see what that cholesterol number is. So they may order lab work or may order medical records or both. Who knows, right? It's up to the underwriter to determine that. So they may order extra requirements before an approval is made. And like I said, we typically have about a third of the people that actually go through the express process. But a third of the people is a significant number of clients that can actually go through that. Now, who qualifies? Because this is not for everybody. The insured is the owner. Okay, this is not for buy-sells. Most accelerated processes don't allow the trust to be the owner of the policy. There are a few exceptions to that, but in general, it's when the insured is the owner of their policy, $1 million or less. Although, as I indicated earlier, some of the insurance companies are upping that amount that they're going to possibly allow a client to go through the lab-free or accelerated process. Ages 20 to 50, and in general, good health. Okay. If somebody had previous cancer, even if it was 8 years ago, they're not going to go through an accelerated process. Or if somebody's 65, they're not going to go through an accelerated process. It's basically for your younger, healthier people. But those that do go through it, the benefits are improved policy issue time, there's less paperwork and follow-up, and fewer requirements such as medical records and exams. So we're a big fan of that. So let's talk about the policy delivery, because we really didn't talk about that yet. Typically what happens with that, once a client is approved for life insurance, the insurance company is going to send it to the issue department. They're going to print it out, have it bound with their nice cover, right? And they're going to mail the policy to us to review. That typically takes about 2 weeks. We're going to actually compose a cover letter and send the policy to the client, assuming it was issued correctly, sending the policy to the client and asking for premium and the delivery requirements. So by the time we mail to them and they mail it back, that can take about 2 weeks. And then once we receive it, we send it to the insurance company. So that can take an additional week. So as you can see here, it can take, 5 weeks, maybe even 6 weeks before it is enforced. And this is not counting the 2 to 3 month underwriting. This is in addition to that. But technology has changed things. And, a lot of insurance companies have an accelerated policy delivery process. And there were some that were starting to do it just barely, or they were thinking about doing it, but they hadn't rolled it out. But with COVID and so many people working from home and not necessarily having access to printers and things like that, they were kind of pushed into rolling out their e-policy delivery system quicker than I think they normally would had. But the express policy delivery, the company issues the policy and sends it to us to review. Since they're not printing it and having it bound, it only takes a day or two for us to, get the policy after an approval. Once we get it, we review it. We typically, if it was issued correctly, send it to the client the same day. And then the client can electronically sign their delivery requirements. And depending on the company, they can pay with EFT or credit card. Um, so, it's one stop shop. And, so you can go from approval to enforce in days instead of weeks. And it saves a lot of time and it saves a lot of trees doing it this way. I am a big fan of the uh, policy delivery, express policy delivery, because, when you get an offer, it's just an offer. The client is not covered until it's paid and enforced. So during that time period, if they've had a change in health, it can change that offer that they got. So with COVID, most insurance companies are requiring, with every policy, even if you went through the express application process, requiring a good health statement to be signed stating that you haven't seen a doctor or you haven't had a change in health during this process. If you answer yes to those that you have seen a doctor or had a change in health, the underwriter may say, whoa, whoa, don't send that check to us, or we're not going to put this policy in force. Okay. What they're going to do now, if somebody just saw their primary care for a regular physical, the underwriter will probably just run their name through databases, make sure there's no change in medications, things like that, and probably place that in force. But you better believe it, if I saw my primary care because I was having, heart palpitations, um, and my doctor referred me to a cardiologist to have a workup, you better believe that underwriter is going to say, we are not placing this. We are going to order those medical records, which again can delay the process quite a bit, ordering medical records again, and it can result in a different offer or decline or postponement. So once a client gets an offer, especially a good offer, we want to get that placed as soon as possible. So let's take a look at an example here. Here we had a client, age 38, female. We submitted the express application. Now we did our pre-underwriting, but we submitted the express application on 7/8 in 2019. She completed the interview with the insurance company on the 11th. The underwriter ran her name through several databases, and then made an approval on the 19th. The policy was sent to us on the 22nd. We sent it to the client on the 22nd, and the client signed the delivery requirements and paid on the 22nd. But since payment tends to occur overnight, it was actually paid and in force on the 23rd. So that was 15 days. So when the accelerated process occurs, it's a great thing, right? Our quickest time was 7 days from the time that we submitted the application until it was paid and in force. Now, why do you think this works so well? Um, this worked well because the client did what she needed to do in a timely manner. There are so many things that can delay the process that is out of our control. So again, encourage your clients to read our emails and to respond to them as soon as possible to keep the process moving forward. Feel free, if you see that we're reaching out to a client and they're not responding, feel free to say, hey, John, can you respond to Jenny's email about moving forward? And then John will probably 95% of the time when a financial advisor does that, the client says, oh, yeah, I'm sorry. Yeah, I'm ready to move forward. So you can help us with that as well. Now, what can you do to help improve the process? Because we look at us, the financial advisor, client, and LLIS here, as a team to make sure the client's moving forward with your recommendation. So, make sure you refer clients to us with plenty of time to go through the underwriting process. If a client does go through accelerated underwriting, that's great, but don't refer clients to us when it's open enrollment, and they need a policy in 2 weeks, because that, may not happen, and then it just sets the client up for a frustrating process. Again, encourage clients to be honest. Um, is insignificant. They may say, oh, this is an insignificant thing. Let us determine whether something's insignificant or not. The more detailed they are, the better it is for us. We can find the best company for your client. And, again, our quotes and recommendations are only as good as the information given to us. So encourage honesty is always the best policy. Don't shop around. Like, you could shop around for quotes, but don't apply with multiple companies. We'll do the shopping for the quotes for you, and apply with the best company. And again, advisors and clients, respond to our emails quickly. Um, so today, I know I kind of rushed through that, but thank you for staying on with me. We went through the basics of underwriting. We talked about quoting and the example with Dave. We went into more detail with the underwriting process and what the underwriter actually is looking for when assessing risk. We touched on express underwriting and the policy delivery. Now, what are the top 10 things that make LLIS different? Well, this is one of them. Listening to these free webinars. We have these monthly webinars. Here are the topics for the remainder of the year, so feel free to register for next month's webinar. We save clients a lot of time and money. We do a lot of pre-underwriting to avoid surprises. And we're proud sponsors of these networks. We have specialists in the products that we sell, like life, disability, long-term care, annuities, and hybrids. And I hope everyone at this point has met Alice. Alice is our secure 24-hour-a-day portal. It keeps you up to date. You can log on and see where your client is in the underwriting process. We can share secure messages and secure documents. So if you need to be set up with an account with Alice, if you haven't been established with one yet, feel free to reach out to me and we can make sure you get set up with an account. Are there any questions?
Yep, we actually have a few questions.
Okay.
The first one is, so you don't, this goes back to the Dave example, so you don't know the cholesterol ratio until after the application has started. How do you know what company to go with to get the best preferred plus price?
That's an excellent question. Some people have asked before, can we just have the exam done and then determine which company? Okay, so then that way we have the lab results. We cannot order an exam until we know what company they're moving forward, because the company pays for the exam. Okay, so we do need to have an idea of which company they're moving forward with. Now, that being said, if the ratio or cholesterol is elevated or lab results are elevated and the client gets an approval different than quoted, then now that we know that information, and that's the same thing we do if we find something in the medical records that was not disclosed to us. Now that we have that information, we do what's called an X-ray. So we send that information to multiple insurance companies anonymously. So we'll say, we have a male this age who's applying for $1 million. This is the situation. And then we ask, how would they tentatively approve the client? And we wait for those responses. It may take a few days to get those responses. And then if it's worth flipping to another company, we'll go ahead and do that if we can save the client hundreds of dollars. Okay. Sometimes the offer that they get, if their cholesterol is elevated, is the best offer they're going to get from any company, you know. But that is true. We don't know the lab results until after they're examined. So we are making a recommendation based upon their other medical and lifestyle family history issues. Good question.
Okay. This other one is a two-part question. Could you
Okay.
please provide LLIS's perspective on these automated underwriting options for term life, like Haven Life, Ladder, Sprout, Fabric, etc., outside of the
Okay.
possible risk? Oh, okay. You're going to answer that one
Okay.
first.
Yeah. So that's a good question. First of all, some of the companies that we deal with have an accelerated process where it's an automated thing. The client actually completes an online questionnaire and kind of based upon the algorithms, they may get an approval right away. Like boom, they're typing this information out and they get an approval. Um, and that sometimes works fine. Now, ladder life, things like that, just like any insurance company, you're dealing with one set of underwriting guidelines. Okay. So, ladder life, you may get an approval, but a client may have a situation that they would be eligible for preferred plus with a company that maybe we deal with. And ladder life is, just dealing with one set of underwriting guidelines. Um, so that kind of takes care of that. Some of the insurance companies also say you have immediate coverage, right? So what they're doing is they're charging you a premium up front saying you have immediate coverage. But that doesn't mean you're not going to have an exam done or that they're not going to order medical records and then charge you more later because you actually got approved at a different classification. I mean, we can do temporary insurance as well. We don't typically do that because it actually muddies the waters sometimes. We ask for premium up front based upon what we're quoting. And all the insurance companies, they have a limit on the amount you can do temporary insurance. So say their limit's 500,000. They may say 500,000, but that can be the max amount you're applying for. So in other words, you can't say let me insure you for 500,000, but I actually want to apply for a million. They're going to look at all the amounts you're applying for. And if you're applying for more than that, then you can't do temporary coverage. The other thing is the temporary coverage is only good for maybe 30 or 60 or 90 days, depending on the company. Well, if the underwriting process takes longer than that time frame, they're mailing a check back to you and you're not covered anyway. So, and it causes frustration with the client that you charged me money and I could have made interest off that. Now I got paid back, and so we just like to go through the underwriting process and then based upon that, once the client agrees that they're interested in actually placing it, because they got a good offer, then we'll, once they have a chance to review the policy and stuff, that's when we ask for a premium. And what was the second part of that?
They were asking, sorry, outside of the possible risks of being disapproved for insurance or paying slightly more, what are the risks?
Um, what are the disadvantages? Is that what the question was?
They're
Again, you're
asking
dealing.
what are the risks?
Um, it depends on how you define risks. I mean, there's really no risk. Again, you're dealing with one insurance company, so and I even looked at some of the ladder life and bestow. I could only get a 10-year term. 15 and 20 wasn't an option. I'm 55 years old. It wouldn't allow. And I had a maximum amount I could even apply for. I think it was like 250,000 or 200,000 based upon my age. So, there's they're stricter, I guess, in a sense. If which may be fine with certain clients. I'm not going to say it's not, fine, but if somebody needs more coverage or wants to get the best premium possible, um, it's better to go with kind of an independent agent because then we have a lot of resources, put it that way, and we do the shopping for you. I hope that answers
Okay.
that question.
Okay. Do those same travel restrictions on level 4 travel alerts apply to active duty U.S. military members deploying overseas on orders?
Um, so that's a good question. First of all, we would need to do what we call that X-ray, where we research companies. Active military, um, we would need to even do that just based upon the fact that somebody's active military as far as trying to get life insurance. So um, that's a specific case, and we would need to do an X-ray if they're going to be called overseas. Um, yeah, we may not be able to get. And the other thing is, you have to be in the United States. All the companies, you have to be in the United States to be examined if you need to be examined, and also to place the policy. So if somebody's going to be moving to Switzerland and they're moving in October, we need to have everything approved and done and whatever before they leave the country.
Okay. And last question. On the topic of insurable interest, once the policy is in place, do they look for insurable interest when you change the beneficiary on a policy?
No, they do not. They do not. So, yeah, they do their best due diligence at the time of application, um, but they don't look at that necessarily afterwards. So, if somebody's thinking, well, I'll just have my mom be the beneficiary, and then as soon as this is in force, I'll change it to my boyfriend or whatever. Um, Honestly, you could probably do that.
Okay, great. And that's it. Thank you so much,
That's it.
Jenny, and thank you everyone who, yep, that's it. If
And
you
I
have any other
apologize.
questions, you feel free to
Yeah,
email
feel free to reach
Jenny.
out to me. Yeah.
Yeah, great. Thank you, everyone. We'll see you next month.
Yep. Thank you.
Bye.
Bye.